Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Crypto Tuesday, March 7th, the year of our Lord 2023. And we're just going to ask the question today. Is the U.S. killing are the U.S. federal agencies killing crypto in America? That's what we're going to talk about today. Won't you join us? Won't you? Last week we talked about the SEC and the chairman there, what he was doing against crypto, how he's trying to regulate it, what he said. We talked recently about Janet Yellen and what she's talked about. You know, the president of the United States is always talking about regulatory. Of course, they couch it into terms of protecting the American public. But I really think what they're trying to do is protect the federal government and protect banking and all of that, and it's because crypto is a threat, and they don't want it. And so today the Fed chairman Jerome Powell came out and he had something to say. So we're going to talk a little bit about that. We're going to read. There's a couple articles. We got a lot to get to today. I don't think I'll get to all of it, but we'll try. But first, like we always do on Crypto Tuesdays, I like to begin with the markets from our favorite site, coinflip.tech. And you'll see that Bitcoin and Ethereum took a dive today. Looks like it started making a comeback there at the end of the day. And, you know, it's been, the market's been wild. It took that, remember last time we visited it, that day it took a huge drop in a short period of time during the day. And since not really recovered. It's really been kind of sideways for some time now, hasn't it? But you know that's where it is. So we always like to start there. So here's the story: Federal Reserve's Powell. We don't want to strangle crypto innovation, but sector is a mess. The central bank's chairman said the Fed is sticking to its warning that banks should be quite cautious about getting involved in digital currency or digital assets. Of course, when the Fed tells banks that maybe they shouldn't do something, I think they listen. And they don't really want to do something like get involved with crypto. And without banking industry, there's really very little hope for crypto. If the crypto industry was looking for a silver lining in Federal Reserve Chairman Jerome Powell's testimony at a hearing before the Senate Banking Committee on Tuesday, the best he could offer was that he's hoping there's something useful and innovative amid crypto's mayhem. We have to be open to the idea that somewhere in there is technology that can be featured in productive innovation that makes people's lives better, Powell told members of the committee in his twice-yearly trip to testify on Capitol Hill. We don't want to stifle innovation, and yet they stifle innovation. Powell was asked to address cryptocurrency issues several times during his testimony, which will continue Wednesday before the House Financial Services Committee. We've seen just a remarkable set of events in the crypto space, he said, noting there's been quite a lot of turmoil in the past year, with companies collapsing and high-profile fraud being revealed. We see in crypto activity lots of things that suggest that regulated financial institutions should be quite cautious in doing things in the crypto space. The Fed and other U.S. banking regulators have repeatedly issued statements and policy interpretations that all amount to a heavy warning to banks that agencies are watching their crypto moves closely. In the most recent warnings, regulators specified that banks that focus their businesses in this sector probably won't meet safety and soundness standards, which are a baseline for being able to continue to operate in the U.S. Silvergate Bank has been offering a real-time example of the dangers of crypto concentration in banking, as most of its crypto customers have withdrawn their deposits from the floundering institution. Powell, who suggested that Congress needs to step in to provide a workable legal framework for digital assets in the U.S., also directly addressed stablecoins as an area in need of oversight. People are going to assume when we deal with something that looks like a money market fund that has the same regulation as a money market fund or a bank deposit, he said. So stablecoins need some attention in that respect. Powell said there's a place for stablecoins in the financial sector if they get appropriate regulation. But Powell argued that there are real concerns about permissionless public blockchains, and the reason that they've been so susceptible to fraud, to money laundering, and all those things. Still, it was Powell's broader views on the economy that had the most immediate effect on the crypto sector. After his comments Tuesday that inflationary pressures are running higher than expected, Bitcoin, which is viewed as a riskier asset that suffers when interest rates rise, fell about 1.6% to below $22,000. The price, however, has bounced back a bit since then, trading recently at $22,319. So that's Powell. This is something we talked about last week, but I wanted to kind of go over it again because it just goes through this theme that I'm talking about, that all of these governmental agencies are going against crypto in a big way. SEC's Gensler warns crypto investors but differentiates Bitcoin. We talked about this last week. I don't know, but I wanted to. So he's the head of the Gary Gensler is the head of the U.S. Securities and Exchange Commission, has recently made some comments on legal status of Bitcoin that investors should note. He said, who has spent much of his career with investment banks and government positions, has commented on the legal status of Bitcoin in his role as SEC chair several times since 2021. The SEC is designed to ensure a safety regulatory environment for investors and to protect consumers from illegal activity, making its position important to any crypto investors. On February 27th, Gensler made comments in an interview about the state of the wider crypto industry. Specifically, he claimed that everything but Bitcoin could be considered a security in the world of cryptocurrency, while Bitcoin could be considered a commodity due to its stature and resolutely decentralized nature. The difference between securities and commodities is often determined by the Howdy test, based on a Supreme Court case from 1946, which dictates that the difference between the two is determined by the expectation that investors will profit as well as the status of the party offering a sale. Securities must follow a far more stringent series of restrictions than commodities do. So Gensler's determination of Bitcoin's status could have major investment implications. In what Time called a federal offensive against the crypto industry, it noted that Gensler's SEC has been shutting down a variety of crypto businesses and leading other institutions like the Federal Reserve to decry the risks of crypto and stablecoins. Gensler has personally questioned exchanges' ability to custody funds, saying that just because a crypto trading platform claims to be a qualified custodian doesn't mean that it is. It's worth noting that these are only his personal views and not in themselves a binding opinion of the federal government. But nevertheless, they have been provocative enough for Ripple to call on Gensler to recuse himself in an ongoing legal battle between itself and the SEC. And that's what we talked about last week, the Ripple case. And they were asking him to recuse himself. Bitcoin's design renders it immune from many criticisms of the broader industry, and Gensler has claimed unequivocally that Bitcoin should be held to different standards. Any arguments against a particular exchange or altcoin project will not apply to the first ever cryptocurrency. However, even if Bitcoin itself will not be attacked, a frostier environment for the wider world of crypto could have negative effects. An important goal for Bitcoiners is widespread adoption, which could be more difficult if exchanges dealing Bitcoin go under. The same effects could hold for a crackdown on miners and lenders, even if Bitcoin exists worldwide. As a result, investors need to be cautious about these developments and their potential impacts on the world of cryptocurrency, and also recognize that a variety of reasons that betting on Bitcoin remains the best and safest option for many. Even with a variety of hostile attacks in the ecosystem as a whole, one can never forget that Bitcoin is the first trailblazer, with years of experience and flourishing under hostile regulators. Any number of cryptocurrency projects could become more dicey propositions if the federal government takes up a firm offense. But Bitcoin has demonstrated time and again that it is capable of coming out of these periods stronger than ever before. So that's a good. Here's another. Ripple. This is a good article too. Ripple CEO. The SEC is why the crypto industry is increasingly going overseas. Garlinghouse argues that crypto firms have already started moving outside the U.S. In a new interview with Bloomberg, Ripple CEO Brad Garlinghouse has said that the U.S. Securities and Exchange Commission's heavy-handed regulation of crypto may kneecap the nascent industry as it's growing. Garlinghouse said that crypto players have already started moving outside the U.S. en masse to avoid the regulatory sledgehammer of the SEC, a statement that was previously voiced by the CEO of Coinbase, one of the largest crypto exchanges in the U.S. The problem is that the SEC failed to create a regulatory clarity here in the U.S., so many American investors, and 95% of trading activity, went offshore. Coinbase CEO Brian Armstrong said following the FTC collapse last November. San Francisco-based Ripple is currently the defendant in a landmark legal case brought by the SEC that will decide the fate of the entire crypto industry and whether many cryptocurrencies will be categorized as securities or commodities. If categorized as securities like traditional stocks, cryptocurrencies will be regulated by the Securities and Exchange Commission. But if classified as commodities, the Commodity Futures Trading Commission will regulate the fast-growing industry. According to some in the crypto industry, the latter designation is preferable for the industry players seeking less stringent or punitive regulations and the comparatively lighter control from the Commodities Futures Trading Commission. Many in the crypto universe are hoping to avoid being regulated by the SEC altogether, the country's top financial cop. We talked a lot about this in the battle between the Commodities Futures Exchange and the SEC. And the SEC has the upper hand since they have much more funding. Indeed, the SEC sued Ripple and top executives in 2020 for selling the world's sixth largest cryptocurrency, Ripple, as an unregistered security. Today, Ripple's cryptocurrency is worth around $19 billion. Although Ripple tried to dismiss the case and skip a trial, citing the fact that Ripple helps facilitate cross-border payments, the case is currently playing out in court with a judgment due this year. As the court drama unfolds, however, Ripple's top executive has not been shy about commenting on whether the winds are blowing and how the crypto industry will fare if the SEC succeeds in a securities classification. First, Garlinghouse warns the industry players are poised for a raft of lawsuits if the SEC successfully sues Ripple. This is not a healthy way to regulate an industry. As for Ripple's fate, the cryptocurrency isn't sliding just yet. Ripple remains one of the few crypto firms well capitalized and ready to meet the robust customer demand of 2023, the company said. Ripple even boasted $223 million in crypto sales in its most recent quarterly report. But Garlinghouse said the U.S. is at a critical juncture where it may fail to host the upcoming wave of blockchain and cryptocurrency innovation. Instead, it is at a severe risk of losing out to foreign countries that are not throttling the sector with regulation by enforcement, he says. He cited Australia, the United Kingdom, Japan, Singapore, and Switzerland as some of the few places where there were clear rules of the road, claiming these places were primed to absorb the exodus of crypto firms. One more. Do we have time? Maybe we do. This is something we've talked about on the channel before too, and that's this is Yellen. Treasury Secretary Janet Yellen calls for a strong regulatory framework for crypto activities. On the sidelines of the G20 meeting, U.S. Treasury Secretary Janet Yellen said the country is not pushing for an outright banning of crypto activities. Well, whenever they say that they're not looking to ban something, you have to be careful because it looks like they're looking to ban something, in my opinion. United States Treasury Secretary Janet Yellen stressed that the importance of implementing a strong regulatory framework for cryptocurrencies during a G20 meeting on February 25th. Speaking to Rutgers, Yellen said that it was critical to put in place strong regulatory framework. She also noted that the United States is not suggesting an outright banning of cryptocurrencies or crypto activities. Yellen's remarks follow earlier ones from the International Monetary Fund managing director, stating that banning crypto should be an option. There has been a very strong push for regulation. If regulation fails, we're slow to do it, then we should not take off the table banning those assets because they may create financial stability risk. In addition, the IMF pointed out to reporters that it is necessary to differentiate central bank digital currencies, which is where they all want us to go, from stable coins and cryptocurrencies, which are issued by private companies. Because it's not that they don't want cryptocurrencies, but they only want the cryptocurrencies that are controlled by the governments. That's what they want. This is why it's a risk for them. That's why this is what it's all about, in my opinion. The first G20 finance ministers and central bank governors meeting under India's presidency addressed key financial stability and regulatory priorities. The country's finance minister called for a coordinated global policy to address the macro financial implications of crypto assets. He has historically supported working with other jurisdictions to develop crypto regulations. India's government has debated whether to regulate or ban cryptocurrencies for several years. On February 23rd, the IMF released an action plan for crypto assets, urging countries to abolish legal tender status for cryptocurrencies. The paper, titled Elements of Effective Policies for Crypto Assets, outlined a framework of 9 policy principles addressing macro financial, legal, and regulatory and international coordination issues. After a visit to El Salvador earlier this month, as we all know what happens in El Salvador, right? They made it their currency. And so this is where the IMF, when the IMF comes after countries, watch out. The IMF suggested the country reconsider its plan. I think you should reconsider. They made me an offer I couldn't refuse. To increase exposure to Bitcoin, citing the cryptocurrency risk to El Salvador's fiscal sustainability, consumer protection, and financial integrity and stability. So those are these are the articles that I've been reading that are telling me that maybe heavy regulation is coming. It's already here. Okay, so we're pretending that it's not here, but it is here. And will it get worse? Well, I don't think it's going to get better. And after reading those, it doesn't sound like it. So watch out. All these regulatory agency, including the President of the United States, because that's who is directing all this, isn't it? Huh. It starts from the top, doesn't it? Anyway, thanks so much for joining us. I appreciate you taking the time. I'm going to ask you to like and subscribe. Hit the button. Make sure you get alerted next time we're on. So like and subscribe. We need your help to get the word out. And so please like and subscribe. And remember, if you have IRS problems, if you owe the IRS money, if you have unfiled tax returns, and you don't know what to do, first thing you should do, get a copy of my book. Deal with your IRS problem today. Go to freeirsbook.com. That's freeirsbook.com. I will pay for the printing if you will pay for the shipping and handling. Again, it's under $10. So go to freeirsbook.com. Get your free copy for just the shipping and handling. So thanks so much for joining us. I thought it was an interesting Crypto Tuesday. It only comes once a week, so I have to jam it all in one show. So thanks so much again for joining us. We'll be back tomorrow with more IRS news, and I hope you can join us then. In the meantime, God bless, and we are now out.